I'm going to be explaining what the ICT power of 3 concept is. We'll first be diving into these schematics and then some real chart examples. The ICT power of 3 is accumulation, manipulation, then distribution. For the bearish power of 3, price will open up. This is where you see accumulation near the opening price. Then it'll make a high. The high is the manipulation. So you'll likely see some accumulation where price is moving back and forth on a lower time frame. Then it'll make the high. This is manipulation for smart money to sell to the buy stops above here, and then price will distribute down. If you don't know what that means, don't worry, I'm going to be explaining it in this video. So within this bearish power of 3, we're looking for manipulation above the opening price to make a high. In this price leg that makes the high up here, we're looking for specific signatures and price action to position ourselves up here. So we're looking to sell above the opening price in this high and then hold towards the close. So you see accumulation near the open, manipulation, which makes the high, and then price makes a low, and then it closes. We're looking to hold towards that close or towards the draw on liquidity. An open, high, low, and close is categorized as OHLC. So we're trying to position ourselves in that high. For a bullish power of 3 example, price opens up. This is where you see accumulation back and forth. So price may be consolidating. You'll see manipulation out of that range. This is when price makes a low, and then it'll close up higher. So it'll make a high, and then it'll close. So in a bullish power of 3, we're trying to position ourselves. We're trying to buy beneath a specific opening price, below a specific key time opening. We're trying to position ourselves down there and then hold towards the close. We're not just trying to sell the extreme high up here, but we're just trying to hold towards the close or towards that draw on liquidity target. So the power of 3 concept will occur on every single candle, but we're using specific time openings. We're not worried about a hourly time open for this example. We're specifically looking at 2 opens. If you're looking at the entire daily range, meaning you're anticipating for price, for example, let's say we're anticipating for price to head up higher. Okay, we're going to be marking out the midnight opening price of New York time. So go to the bottom right-hand corner of your chart. Make sure you have New York time. When we're utilizing these key time openings, it's based off of New York time. Even if you live somewhere else in the world, we're using midnight New York time. So if you're anticipating for price to have a bullish day, you're going to mark out the open of midnight. If you're just looking at the morning session, you can just mark out the 8:30 opening price, again, all on New York time. So let's move into the next schematic we have over here. For example, let's say we are bullish. This is the higher time frame draw on liquidity. I will be explaining draw on liquidity a little bit soon, so make sure you stay tuned for that. Let's say we're anticipating for price to draw up into this high over here. So we're anticipating for price to draw up higher. We're going to mark out the opening price of midnight. So let's say it doesn't matter what time frame you're looking at. You can look at a 30-minute time frame, a 15-minute, a 1-minute. You're just marking out the opening price of that midnight. You're going to extend that out in time. You could also mark out 8:30, but if we are bullish on the day, midnight is going to be more significant. So all of this price action in here, this is just accumulation. We're looking for manipulation out of that range. Once we get manipulation out of that range and we get a specific signature and price action, that can put in low of the day. So I have LOD, that means low of the day, beneath that opening price. So when price goes beneath this midnight open, this is where we anticipate for price to key up off of beneath this level and then start to distribute higher towards the draw on liquidity target. So for a bullish power of 3, if we're looking at the daily range, we're looking for accumulation, manipulation. So we want to see price dip beneath this opening price, midnight, and we're hunting a signature in there to buy and then hold towards the draw on liquidity target. So now for a bearish power of 3, we're going to do the same thing. If we are anticipating for price to trade lower, let's say our higher time frame draw on liquidity is beneath where price is right now, we're going to mark out the open of midnight. We're going to mark out the open of 8:30. If we are anticipating the daily to be expanding towards this draw on liquidity target, again, midnight is going to be more significant. If we're just looking at the AM session, we can utilize 8:30 as well. So I'll mark out both typically. In a bearish power of 3, this is all accumulation right here. Manipulation is when price goes above that opening price. So above that midnight open, we could see manipulation. Again, you could also use 8:30 as well. And above this midnight is where we're going to be looking for short setup. So we're looking for specific signatures and price action to suggest that price has topped above this key opening price. So if we're bearish, we want to see price go above that opening price first, then hunt for a bullish signature and price action, and that will put in high of the day, HOD, high of the day. and expand towards that draw on liquidity target the rest of the day. So we have the bullish power of 3 over here, bearish power of 3 over here. This is all based on New York time. If you guys are interested in seeing more content from me, I do have a Discord server where I share my thoughts on the NASDAQ and S&P 500 every single day. So I do also cover crypto stocks. I cover the NASDAQ and the S&P 500 on the higher time frame, and also occasionally commodities and Forex. There is also a section where I do have an ICT course, which is 8 videos on covering how to trade ICT concepts from beginner to advanced. It's for any knowledge level. I have 8 videos in here, originally 7, but I just added an 8th one covering the market maker model with some gems on how to figure out key levels to target. If you guys are interested in that, there's a 3-day free trial in the description. So before we do dive into looking for this concept, you need to know what your draw on liquidity is. As ICT says here, your first rule of engagement is knowing where price is likely to reach for. If price is likely to reach for an old high, then you refer to these key opening times. If price is likely to reach for an old low, then you refer to these key opening times. This does not give you a direction because price can manipulate above it and then trade back beneath it and then expand higher like it does in this example. So you need to understand where price is likely to draw towards, then these key opening times do become significant. So we're going to be diving into that right here. Price expands lower from this level, it returns back higher above this old high. When I mark out these key highs, right, so this is a high and a premium of the range, and it's also near this breaker. So we have a high, low, higher high, lower low. Okay, when price returns above this old high and this breaker, I want to see what price does in this area. That will give me the next draw on liquidity. Since it does expand lower here, and then it creates a shift in market structure lower. It also creates a change in the state delivery here. So I see price make an order block off these levels. So to put it in simple terms, see these 2 up close candles in here. When price closes beneath there with a fair value gap between this candle's high and this candle's low, that indicates to me, since it took out this old high and since it retested this breaker here, that price is likely to expand back for these relative equal lows. Since I do have a bias now that price is likely to expand for these lows, then I can go in and in this fractal price action from this high over here to this low, okay, I'm going to be hunting for a bearish power of 3 each day until it reaches the draw on liquidity target. So we've come up with our draw on liquidity. Okay, I'm not going to dive too much into that in this video because that's not what this is about. But if we utilize that logic that we're likely to expand for here, now in this intraday price action, what we can do is mark out midnight and we can mark out 8:30. So if we look over here, see how it says 0000? This is, again, based off of New York time. Okay, I'm going to mark this out, and I usually just have a saved preset where I mark out midnight, and then it changes it for me. All you have to do is literally click Save Drawing Template As, and then just make it however you want. But we have the bias that price is likely to trade lower. Now what I can look for above this midnight opening price, because remember, everything around this is just accumulation. So it's just a larger power of 3. This is all accumulation in here. Okay, we're anticipating manipulation above this key opening price. How do you know when it's going to top? Why didn't it top right here? Why didn't it top right here? Why didn't it top right here? Because it needs to run buy stops first. So this is going to be a key high that the algorithm is going to refer back to. Okay, it's going to reprice above there. And then once it creates a change in the state delivery down, so it breaks beneath this key up close candle right here, that can put in high of the day. Okay, so remember, we have a higher time frame bias that price is likely to trade lower. It runs above this old high, so it runs out buy stops. Then it creates a change in the state delivery. This high now is going to put in high of the day, and price is going to expand towards the draw on liquidity the rest of the day. So if we look at the time of this is at 9:30. Sometimes 9:30 will expand price above there. We could utilize that time opening as well. If you guys want to learn more about that, I do have a Judas swing video on my YouTube. Price expands lower, and if we look where price closes, okay, so this is at 9:30. Price closes down here. This was actually, I think this was a holiday day because it just goes straight to 18 right there. I don't see any closes. It was likely a bank holiday or something like that. But you can see that pretty much puts in a high and price starts to expand lower. Now, if we look at Tuesday, we could utilize the same logic here. So we have 0000. I'm going to be marking out that opening in price. Okay. At 9:30, what does price do? It manipulates higher. It runs these buy stops. So it takes out this old high. and then it starts to displace lower. So this is going to put in high of the day now, and price is going to want to reach for that draw on liquidity. Notice how it takes out the draw here, that higher time frame draw that we talked about. Once it takes out that draw, I'm not continuing to hold this. So if I position myself up here, you could look for a lower time frame setup up there. If I position myself up here and price takes out that draw, I'm not going to continue to hold just because it's in a bearish power of 3. Once that higher time frame draw on liquidity is hit, this high right here is no longer protected. It's only protected until price reaches that draw on liquidity. So that would be an example of how I'd frame a bearish power of 3 setup. I'm finding a draw on liquidity, then I'm referring to key opening times, then I'm looking for buy stops to be ran and a change in the stayed delivery to put in high of the day. So that's something that you can go in your own charts and study using that framework. You will find most of the time that that high is protected until it does reach the liquidity target. So price, before it had that big retrace up and then right back down, we did have price taking out sell side liquidity here. So it took out the sell stops, and if we scale down to an hourly time frame, price created a bullish breaker. So it was delivering from the sell stops. We have these two up close candles. This is going to be the bullish breaker. The last up close candle is the most significant one, so we can refine that to that price level right there. This is a breaker because price makes a low, high, lower low, then higher high off of a key level. So it's likely to now expand for buy side. So we have an idea here that the draw on liquidity is likely to trade up to this high. Since we do have that draw, as price is expanding higher, we can look in the price action with the idea that price is likely to trade up to here, and we can look for a bullish power of 3. Okay, so you can mark out 830 as well, and I'm going to do that in this example here. And so we have the bias that price is likely to head up to this level. If you look at this key time opening right here, this is 0000. So this is midnight. I'm going to mark that out, and I'm going to look for sell stops to get rammed beneath this price level. So if you notice, price manipulates beneath it here, but what does it do? It creates these relative equal lows. So since it does that, it's not likely to reverse until price is taken out both of these levels of liquidity. Okay, you could also look for SMT as confirmation. Price takes out the sell stops, and then it creates this breaker right here. So this breaker is significant. Why? Because price is manipulated beneath that opening price. It's taken out sell stops, and the draw on liquidity is higher. So now this is likely to put in low of the day right here until price has hit that draw on liquidity target. If we want to mark out 830 as well, you can see that that concept didn't work as well here because price manipulates beneath it. And really, it didn't turn into a buy program until it took out these relative equal lows. So I'm not typically, there is ways to use 830 to find the low of the AM session. But typically, if I'm referring to power of 3, this is just a personal preference. I will only look at it for the daily range. But again, there are ways to just use 830 for the AM session, right? So this is going to put in low of the day. Price can expand higher from here, creates the change in the stay delivery. This last up close candle, okay, if you look towards a lower time frame, it will become a clear breaker. Notice how price is respecting that. Why is it respecting this breaker? Because it's taken out key sell stops. The draw on liquidity is higher, and it's created a breaker in the direction of where price is already heading. So this low is now protected, and if we look where price closed at, price closed all the way up here. Okay, so we're going to buy that, hold towards the draw on liquidity, and either I'm going to hold towards the end of the day, or I'm going to hold until the draw on liquidity gets hit. So as soon as this high gets hit, that's where I would hold towards. But that's going to be it for this video. If you guys enjoyed this video on Power of 3, make sure you like and subscribe and share this video, and I'll continue to make in-depth videos on ICT concepts. See you guys next time.